Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through some of the comments section on YouTube. I'll make some comments on their comments and give you my financial opinions. Sometimes I go through the comments section, just read through it. And if there's something that sticks out, I like to make comments on it. There's a lot of comments in the comment section that are uh, pretty much the same. And I share a lot of information off Twitter, which is just social media, and I share potential opinions of people on there. Some of them are my own opinions, and some of it is, well, a lot of it is not my opinion, but someone else's. So let's dive in. Let's take a look and see what people are talking about, and then I'll interject my opinion as well. So first, we'll start with making this larger so you guys can see it. It says, "Where's Crystal Clean? He predicted uranium stocks crashing." Let's remember his absolute astute prediction. Some of these guys, I think they troll in the comments section. I've had to block a few of these people who continue to post very negative, opposing views. Not just negative and opposing, but the language that they use is very offensive to either other posters or to myself. So sometimes I block people, very rarely. But Crystal Clean was one of them that has been blocked. There's a few others that just continually post offensive stuff. It says, "This is crazy. When the yield curve, when has the yield curve ever uninverted and there wasn't a recession, especially from this far inverted? There's something coming and it isn't going to be good for the economy. Now we know what they are going to do, throw money at it, and we will get the boom you're talking about, but there's going to be a lot of pain somewhere this year or next. I'd say they aren't going to let it crash in an election year, so my guess would be after then." Well, everyone thinks that this thing's going to crash in nominal terms. They live in a world that's all nominal. Nominal means that they will literally see the price of the stock market of something go down. What if it goes down real but goes up nominal? What if we go to some crazy inflation level where they just fiscally spend far more than what can nominally come back down? And that I don't know. The yield curve's inverted, but here's another question I have for everyone else. When was the last time that the yield curve inverted from stimulus measures? Never in history have we had a yield curve that's inverted off of the majority of stimulus. With the rates going up, yeah, we definitely could get a slowdown. I completely agree. But generally, inflation has generally the housing market is what goes up. The housing starts and then inflation comes after. At least that's what occurred in the 2000s, and that's what occurred in other times. Right now, the housing market, and I know a lot of people are very in disagreement with me because I still believe that the housing market is resilient. It doesn't mean it will go straight higher, but with where housing is at, to me, we haven't built the homes. We're not in a hyper supply phase, so housing will remain resilient. If job losses aren't coming from the housing market, they're going to have to come from somewhere else. Looking at history, there's very few times in history where we've had a recession and it didn't include the housing market. Where the housing market is the leader, the recession is the symptom of the housing market going down. The only time that really didn't occur was in the year 2000, 2001. Could we get a slowdown that's like that? We very well could. And the yield curve inverting and uninverting is generally when that time frame occurs. So the question then is, when is it going to uninvert? If we're in the middle of a very strong impulse move of demographics coming into home buying years, and coming into peak spending years at some point. When is this recession going to hit? I, I don't know. And that's where everyone thought it was going to hit in 2023. It didn't occur. And we had a pretty big up year across the board for many asset classes. So, like Peter Lynch says, more people lose money trying to predict and invest based off of a prediction of when a recession will occur than the actual pullback in the recession itself. If even if we get a small pullback, or even if we may not even get a huge recession, maybe we get a pullback that isn't as bad as what most people think. Everyone thinks that we're going to get this big, great financial crisis again, like 2008. I hate to break it to you, but that was a deleveraging phase of real estate. And we will not have a deleveraging phase of real estate where we're going to get this big, gigantic crash. At least that's my opinion. It's not coming from the housing market. It could come from something else, but it's not coming from the housing market. And all of these big recessions in history have come from the housing market for the most part. It says there's enough oil in the world, but the two countries with the richest oil reserves do not play the game of the US, so they got sanctioned. No need for more research, but more diplomacy or better will. Andy, do you ever evaluate the BLS unemployment data? Headlines say highest employment in decades, but government data on non-farm payrolls is constantly revised down, while full-time jobs are decreasing and gig second jobs increase. No, I haven't looked at the BLS unemployment data here recently, but I mean, I've watched. I look at stuff on Twitter, and what I mainly do is I look at a lot of the charts across the board. So a lot of you guys are looking at lagging indicators. You're looking at unemployment and all these other things. Those are all lagging indicators. What you want to look at, in my opinion, is you need to start reading the charts and the technical analysis, because that's what you're looking at, the prediction looking forward, so to speak, of money flows coming into the market. So the lagging indicators means that if unemployment is going up, that the slowdown is already occurring. And could unemployment become worse? I mean, we'll see. No one knows with any sort of certainty, and that is where I think people get it wrong, is because they talk like they know what the future holds with certainty. Oh, the yield curve's inverted, therefore we will get a recession, and then they put a timeline on it, and I'm like, I don't know if it's going to occur in that time. I mean, a lot of people said that we were going to get a recession in 2022, and then 2023, and then what's it going to be? 2024 now. What if it doesn't come till 2027? What if we have the entire commodity bull market occur before we have a recession? What if they pump this system with a bunch of liquidity as liquidity is coming higher and we don't get a recession? What if someone tries to time the recession, it doesn't come for 3 or 4 years, and we have a commodity boom in the meantime? Now, no one knows the future here, guys, and I think that's why all these people get it wrong consistently. Harry Dent's called more recessions than anyone I've ever seen, and he's probably been the most wrong I've ever seen of any person. Harry Dent and some of these other guys too, they continue to call for all these different things. It was one of the reasons why I dove into the data and tried to figure it out myself. And with the split in the data today, it's very hard to know what is necessarily going to come next. You don't follow Lobo? I don't know what that is, but lowering rates will tighten credit. Less lending as banks hoard cash. Fed emergency loan facility being maxed out currently by banks. I don't agree with that. Lowering rates will not tighten credit. Lowering rates is going to expand credit to people who want to take it out that I mean, if the banks are willing to loan, yeah. I don't know. I don't know about that. I don't track my net worth either. I just know that I have no debt and I have a lot more money than a year ago. Yeah. Thanks for the updates. Personally wouldn't touch home builders here with a 10-foot pole. But that's the general consensus. I hate to tell you, but if everyone's predicting a recession, I highly doubt we're going to get a recession if everyone's predicting it. And most people get this stuff wrong. Home builders look strong as heck. And housing starts just shot up here recently. We'll see what the trend looks like over the next few months as rates come down, and we'll see if housing starts continue to go up. If they continue to go up, then my stance is that the housing market is strong. It's that simple. Don't try to predict it, but I think home builders are going to do very well. That's what I think. It doesn't make sense power burn for natural gas going up because it's so cheap. Yeah, it does make sense. Yeah. We have a glut in the US, a definite blessing. This, however, is not a blessing for the oil price. As you know, many of these power stations no, I don't think they can switch between nat gas and oil. They're only nat gas. They don't burn oil. I think you're thinking of maybe other stations that burn oil. I don't know of any that burn oil. I think they're all natural gas, at least in the United States, from what I understand. You know, power stations burning. Yeah, I don't think they burn oil. Don't make predictions, make money. Bears sound smart, bulls make money. I hate to say it, but most of the bears sound absolutely retarded. To me, I listen to bears year after year after year making the wrong predictions over and over and over and over. I hear more wrong predictions from bears, and the bulls typically just say, "Yeah, I think we're going to go up. I'm going to try to make money." They're optimistic. The bears are pessimistic all the time, a lot of them, and they just continue to be pessimistic even when the market is going up right in front of their face. Even when money flows are coming in and you're breaking big patterns and stuff, they just continue to be bearish. And I hate to say it, but most of YouTube is incredibly bearish on everything. Yeah, they get a bunch more views on YouTube. I get it. But you know how many housing crash videos I've seen since like 2020? I can distinctly remember Meet Kevin, Graham Stephen, Reventure Consulting. Harry Dent every year makes a bear video. He made a big one. You know, he had one in 2014, 2016, on and on and on. It was like every other year he comes up with this big prediction that we're just going to crash 80 or 90%. All these guys, all the bears sound absolutely retarded. Sorry for using the word retarded. They sound absolutely stupid. They sound like they have no idea what they're talking about. And they continue to try to make predictions and always try to force these predictions out there. And yeah, they get a lot of views because what they're doing is they're hitting the fear button of everyone that wants to click on the video because human emotions are stronger, the fear in humans, than making money or happiness. So if they can scare people, they'll get more views. So most of these clips that I see, it's all like fear driven. And to me, with them being as wrong as often as they are, I don't know why anybody even listens to them. I mean, that's my opinion on it. I want someone that can say, you know, this is a good, strong likelihood, and then have a solid reasoning behind it. Most of the reasoning that I hear is either regurgitated garbage, or they show data that doesn't make any sense to me. So, I mean, if someone says housing's unaffordable, well, if you're in a housing shortage, it's supposed to be unaffordable. I mean, I hate to say it, but that's just stupid. Well, housing affordability, the average person can't afford a house. Well, if you're in a huge housing shortage, the average person isn't supposed to be able to buy a house. I mean, it's just stupid. Says Andy, thank you for mentioning fiscal spending. Yeah, there's fiscal spending, but some of this stuff, guys, it's like, it, I don't know. Wealth building equals escaping the 9 to 17 rat race. Yeah, I mean, that's, I think, why most people want to build wealth. Palladium's the only thing not sanctioned on RU Russia. It's not shady. Well, they produce something like 65 or 60 to 65% of the palladium comes from Russia. You can't sanction that. It's just going to shoot the price of palladium to the moon. It's basically a monopoly. Same with platinum and palladium in South Africa. It's a monopoly. It all of the PGM metals are basically located in a few countries, and that's it. Elizabeth Warren is saying the average home price is totally unaffordable for teachers based on their current salaries. Yeah, but are teachers supposed to be able to afford housing on their current salary? I don't know. I mean, a lot of people they'll say something about a profession, and are teachers supposed to be able to afford that? I don't know. I mean, a lot of the, I mean, I hate to say it, but you could wipe out AI and or technology is going to wipe out the majority of jobs in this world. If engineers can figure out how to link buyers and sellers on homes and cut out all the middlemen like these real estate agents and figure out how to quickly address sickness in people where you don't have to go into an office to get evaluated. Maybe you go into a place, blow into something, and they can give you a prescription to help you with whatever. You basically skip out on doctors. You skip out on a lot of this care if you just have a basic cold, or you've got something where you got an ear infection, and they can put something in your ear and check it very quickly. And all it is an assistant, and they put everything with AI. Or teachers, you can teach the entire world through your computer. You don't need teachers in a building. Just wait until people release something where you can go online and learn for a fraction of the cost, and they can teach everyone. This is coming. And do you think teachers? I don't know. I think big changes are going to be coming, and I think the world's going to drastically change. Look at the size of the area under the M2 between '08 and 20. We need to put in some serious area over M2 in order to have an asset class make an accounting of the M2 increase in its value. I agree. I agree. Coming down, this doesn't appear to age well with Michael Saylor down 46%. But he was talking about being up, so he's basically lying to us for that. And that did go down. But yeah, we bottomed. It's Bitcoin and cryptos on a shorter cycle. It cycles more frequently through its ups and downs. Okay, coming down here. URNM and URA now done funding dividend payouts. As my elementary school bus driver said, everybody sit down and shut up. We're about to get moving. Man, I missed the 90s. The 90s were pretty good. Historically, nominal home prices keep up with inflation and wages, so real home prices should be flat in the long term. Since nominal home prices have greatly outpaced both inflation and wages in the last 3 years, expect real home prices to revert to the mean. No, you only revert to the mean when you have a hyper supply phase. You don't revert to the mean just because you revert to the mean. You revert to the mean because you have more supply than demand. You start to outperform when you get into a large squeeze in the housing market. And we haven't built the homes for the supply to bring the price back down. Now, here's the thing. What is the cost curve of the houses? I mean, some homes may stay up and may continue to go up if we continue to get inflation. Here's another thing. It says also, we are heading into a strong stagflationary environment, which is bad for housing. Tell me an inflationary time in history where housing went down. Just tell me one inflationary time. Tell me like where the housing market wasn't overbuilt and we had inflation and the housing market went down. And I'll tell you this, it's never happened in history. Never. Every time housing has gone down, we were in a hyper supply phase. Housing just recently has housing gone sideways to slightly lower in some cities with less than 6 months of supply? Every single time in history, when we got below 6 months of supply, housing has gone up. But we've never kind of stress tested that data with interest rates going up as fast as we have, generally driven by stimulus, because in history, the rates were driven by loaning in the system, and inflation came about by the credit expansion. It wasn't fictitiously created by stimulus and being printed out of nowhere. So we just went through a period that has never occurred in history where we dumped money into the market with a copious amount of stimulus. How does that impact the yield curve? How does that impact the economy? How does that all work together? And that is what I think is very difficult to figure out. And I think other people, they just look at the leading indicators and say, oh, we're going to get a recession. How do you know that? We just put synthetic stimulus into the system. It came on up, but if we're in the middle of the strength of, if we're in the middle of a demographic, if we're in the middle of potential loaning and all that other stuff, which historically has bared bull markets and strength in inflation, how do you know with 100% certainty that this time will act like the previous times, even though we've done a bunch of stuff that the previous times have never had? There's a lot of uncontrollable things in this market that are occurring simultaneously, which I think is very hard to nail down. Michael Gayed, he always talks about the lumber price. The lumber price, when we shut down the economy, skyrocketed. Well, tell me another time in history where we shut down the economy. Tell me another time where we had all of these types of things where the economy shuts down and inject 40+% of money supply into the system. Like, tell me another time in history when that's occurred. And how do you know what the after effects of that is? Because it's going to depend where you're at in the real estate cycle and where you're at in the demographic when you shut down that economy and when you inject that money. If you inject it during a time where you've got the demographic falling off a cliff, aka China, you're not going to get inflation. Because, well, depending on where you put that money in the system, you've got no credit expansion. You've got no way of getting that money into the system through inflationary measures. Now, unless you just basically give people checks and just hand the money out, that's obviously going to be inflationary. But if you can't get the money into the system, it won't be inflationary. You have to loan it into existence for the most part and get the money into the hands of people. Because I really don't understand the gold miners underperforming gold. Miners should be a leverage bet on gold. Gold is near at an all-time high, and the miners continue to suck, even with lower-ish inflation. I think gold will have to hit 5K an ounce before the miners come alive. And look at all these guys; they're all disappointing. What I'm going to say there is the miners have lagged since the mid '90s. They've been in a downtrend ever since that time frame, in an underperformance against gold. I think at some point that will change if we can get the ratio to break out. XAU to gold ratio is what I'm referring to. Gold and silver mining companies. We can look at it real quick here, and we're trying to basically turn and bottom out here. So XAU divided by GC1. So this is the ratio here, and to me this looks like it's trying to bottom here. I mean, you can definitely see we've got this kind of downtrend line here, potentially breaking. But think of it this way: we've got kind of an expensive period here, we've got a cheap period here, and then we've got a basing period here. And I just taught this here recently. This is kind of stage analysis, and you don't really use it on ratios all that much, but to me, this looks like it's trying to bottom out. We've got the highs coming up here, and we've got some pretty good resistance coming through there. To me, this looks like it's bottoming out, and we're going to try to work our way on up eventually. So it takes patience. I get it. I get it. I know nothing about trading, investing, and no, it's probably another. There's all these people in the comments section, the bots or whatever. Justin maybe did not get it when he commented on the post from Antonio. His interview title mentioned sell signal as content, but in the sense of selling when the peak is presumably over. And the answer was from the interviewee that he will not sell before next gen asset comes online in several years. So the question was not whether there is a short term sell signal in the current market condition anyway. Well, thanks for that feedback. Um, and I don't think that's when the asset will go down, uranium assets. I think uranium will go down when credit goes down, when we get a big deleveraging event. It will definitely go down in that type of event before I think next gen and some of these other ones come online. Strong today, weak tomorrow. COVID, your fart is in brain fog. um, Going to economics class with Pocahontas is like fishing with an accordion. An engineer lacks imagination. Costs can also be reduced by new technology. Printing homes creates different homes, but on large scale, it might bring down costs, just as one example. Where are these homes that they're printing? I don't see any, at least in any of the neighborhoods that I see here. So that's what I'll say. A lot of people talk about new technology, and most of that new technology um, does not take off. So they're like, well, just wait until this new technology comes. Well, just wait until this occurs. I will. I have been waiting for a very long time, and it hasn't occurred yet. We do 3D printing where I used to work. I would run the 3D printer. We did a bunch of modeling and 3D printing. So yeah, I know I'm very aware of the technology. We've used it quite a bit, and I don't know. That's all I'll say. I don't see any homes being printed with 3D printers, at least anytime soon. Of course, Warren likes to use teacher as a home buyer. How about the working class? As rates lower, credit will tighten. Maybe low supply, but not the demand. You said that multiple times here. Um, okay. If every consumer in the US would live after the rule, don't spend more than you earn, the US economy would be crashing within days. The only reason for US people to work is consume. And that is what the industry and media supported heavily. I totally disagree with that. I mean, yeah, maybe if you go from today to something else, but imagine if we saved and invested over the years. Consumption is a result of work. So when someone consumes, it says law. It's called says law. And what says law states is in order for someone to consume, they must first basically save and produce. Unless you're just the Federal Reserve printing money, you have to go get a job to go work and earn something. So you can't consume before you earn or produce. And that's if you save and you invest and you'll also consume just by living and buying some things. But if you overconsume, that's when you get into the problem. And that's where you get these big crashes. An economy and in a country is more resilient when they have a lot of savings. And if someone loses their job and they've got a lot of savings, they'll say, ah, it's okay. No big deal. If you are over consuming and you're in a lot of debt and you lose your job, that's a crisis. So we're in a crisis because we've got too much debt. Debt is the problem. It's not the solution. The solution is savings and becoming more resilient, in my opinion. I doubt Elizabeth Warren has your depth of understanding of the housing market or the economy in general. We know that she was a home flipper with insider information. Why doesn't silver go up if there's such a deficit on supply and there's demand for more ounces than are produced? I thought supply and demand factors create a price and that the price creates a equilibrium for supply and demand. Why hasn't the price gone up then? we're eating through inventory. We're eating through inventory. And then once sentiment changes on the sector, price goes up. And we are still early in the deficits eating through the inventory levels. There are some people who think that there is manipulation. It says man-made manipulation. Maybe there's manipulation, maybe there isn't. If there is manipulation for a long enough period, then the price will have to go up because the supply will be gone. The inventory levels will be eaten up. It says if you're an engineer and fed up with the corporate environment, maybe try working for a small company. It can be a lot of fun and exciting. As an engineer, you can develop new products and pretty easily gain some ownership over the company. Yeah, I totally agree with that. No doubt there, Flawless Cowboy. Totally agree. My boy Platty, you got that right. Because I wonder how many of us will live to see $100 silver. I've been doing this silver thing for close to 20 years. And although the chart looks great, the light grows dimmer. Just look at it as financial insurance, is what someone says. I think that when we break this $30 per ounce price, I think we'll go to 100 pretty quick. That's what I think. And we'll have a triple, it'll be a breakout of a very long cup and handle, and we could go many hundreds of dollars, is my guess. When's the time frame? I'm going to say before 2030 is what I'll say. Before 2030, it'll happen. Check out Gregory Manarino. He says oil price is being manipulated. Manarino says a lot of things. Yeah, I've seen Gregory Manarino. Maybe it is. It sure looks like something is going on in the oil markets, and we have very high demand. We're eating through inventories, and the inventories are very low. And you know what? He very well could be right that it is someone's trying to do something with it. I don't know. But I'm going to end it there, guys. That's a pretty long video already. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. We've got a 5 p.m. Mountain Standard Time question and answer session coming up. We'll see what you guys want to learn during this one. Maybe I'll start going into how to pick individual companies if you guys want to. But that's something we could cover, and I can show you how I approach choosing companies and stuff. All right, guys, that's what I've got for today. Don't forget, we're getting real late in the month. I know that the holidays coupon code in the description link, if you want to join our community, is going to start to expire at some point here soon. So you might want to jump on that. I think it's a little bit after the New Year's that it expires. So that's what I've got, guys. We'll catch you later. This is Finding Value.